Well, with that, let's quickly shift the focus to the commodities space. As promised, we have Manisha joining in. Manisha, what's making the headlines today?
Well, I'm looking at the latest Sebi notification that came in last evening, and that does change the way the Indian commodity derivative markets are trading right now. Remember, we are looking at Indian participation to increase and so the foreign participation as well. So Sebi now has allowed direct market access in the exchange traded commodity derivative market, and this is done with an immediate effect, and that would mean that you will see more participation coming in from FPIs here. This was recommended by CDAC, which is the Commodity Derivative Advisory Committee, in the previous meeting, and Sebi has now taken note of that. So now what will happen is that the client of brokers will have direct access to the exchange trading, and that has a lot of positives really, which we will see. This enables the client for direct orders, faster execution as well. It reduces chances of errors here. Confidentiality is something that you can continue to maintain, and the arbitrage opportunities also continue to increase. And for this, what the brokers will need to do is that they will need to facilitate the client authorization, broker-client agreement, and risk management. I mean, this is something that the equity markets already are doing, and the commodity markets, this is now extended to them as well. There are various ways on doing this as well. So until now, what commodity derivative markets have is the Category 3 AIFs, which is alternate investment funds. Commodity markets also are allowed portfolio management services. Mutual funds are allowed to encourage or also trade and invest in case of commodities here. So within FPIs as well, it is going to be individuals, family offices and corporates which are now allowed to trade within India here. What you need to do though is that a position limit of 20% of the client level will need to be maintained when it comes to the commodity contracts here is something that you will need to look at. Apart from that, Sebi in August already had allowed FPOs to participate in cash-settled non-agri commodity derivative markets. We have seen that pick up a bit, but with this as well, it's quite a positive. And we have seen the exchanges, MCX especially, see a bit of gain because of that.
All right, interesting developments there, and perhaps more action in the commodity markets now. Thank you, Manisha, for that.